All right, what's good, boys? In today's video, we are going to be breaking down the third 90-minute Ethereum trade that I caught last night. Made me around $900. I'll pop up that screenshot right here. And it was super simple. So first thing I'm going to do is go to Ethereum on the higher time frame. Right? I'll kind of look at it on a 6-hour view here just so we can build some higher time frame context. And what we had seen was this mega leg up. Right? Ethereum had pumped just about what? 20%, right? 22%. And as you guys know, I trade 90-minute time frame, right? So I like to trade the 11 p.m. Eastern Standard Time open, right? It's not a market open, right? Because we're trading crypto, but all we're doing is trading the fractal, right? Why do I use the 90-minute? Well, if you look at a day and you fractalize that into 4 fractals, right, it gives you 4 6-hour candles. If you look at a 6-hour candle and you break that down into 4 fractals, it gives you 4 90-minute candles. Right, so all that I'm doing is trading the third 90-minute candle of the new day, right? Quarterly theory, exactly. So all I'm identifying is that volume comes in at 11. So that's what I know. So I can go and use the 1-minute confluences, right, for my entries. So all I'm doing now is go into the 1 minute. I don't really need anything else on the higher time frame, right? Like I can go to the 5 minute. I can identify this 5-minute bullish gap that we have below. But in terms of the trade that I'm going to take into third 90, right, I didn't know if I was looking for a continuation long out of this 5-minute gap, or if I was looking for a reversal short off of these equal highs, or if I was looking for a continuation short. I don't know, right, until we have that open. So I marked out our low resistance or our 1-minute liquidity above. I marked out our low resistance or our 1-minute liquidity below, which is what? Equal lows right here and here. All this trend line liquidity, right? So we have liquidity above and below. We also know we're overall super bullish, and we had this unfilled 5-minute gap below. So all I did was I went to the 1 minute, I waited for 11 p.m. to open, and this open candle is context for me. What did we do? Here's our open. We opened high with that wick, not really a major open high, but it did open high, and we gapped down, right? This to me, this gap down off the open is the most important piece of information for me. Why? Because it tells us that momentum is pushing towards this low resistance sell side liquidity and this 5-minute unfilled bullish gap, right? And if we're going to continue higher, we need to fill that gap. So all I did, right, and I'll use replay mode again here. All I did was look at the 23-minute, call me crazy, but that's a time frame that I like to use. I looked at this 23-minute candle and I saw that we were opening high, right? So I'm going to go ahead and mark out the open of that 23-minute candle. We have that aligning, right, with the gap down. So all I want to see now with this new 23-minute open is an open high, right? And then giving me or showing me some sort of signs or some sort of lower time frame confluence that we're going to continue lower, right? That could be just another bearish breaker structure. That could be a bearish inverse fair value gap, whatever. But it's happening with the third 90 and the third 23-minute candle, right? So we open, we inverse this fair value gap. Soon as that candle closes and inverses with that 23-minute open high, I took my short, right? Took my short, targeted this unfilled 5-minute, right? And that was that. That was the trade. And then, you know, for some reason, BTCC doesn't show executions. So just for execution's sake, I'll show you my Instagram story. So you know I'm not a fucking LARP. Right? Bang. Right here. Third 90. There's the execution short. And then, oh wait, I got to move this over. There's the execution short. And then there's where I TP'd long. You can see I made $800 on that. And then there was another partial close that I made $200 on. But that was the trade. Using higher time frame confluence, higher time frame bias, pairing it with 1-minute confluence and draws and liquidity, and that was it. And then let's say, you know, you didn't take that short down, you know, maybe that was, you know, too discretionary for you, not super clean, right? Well, then you take this long back up. We swept the liquidity right down here. We filled that 5-minute gap, and we give a 1-minute inversion, right? If you didn't like the short, take the long back up. Risk outside the 5-minute, target the highs, whatever, boom. 3:30, 90-minute goes hard. Use the 90-minute SSMT. Not sure what SSMT is, but I do use the 90-minute, yes. But that's going to be the trade breakdown. If you're not in the Discord, join up. First link in my bio.